Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, December 19th, 2018. We'll take a look, folks. Markets just got the FOMC statement. Basically, the Federal Reserve was slightly more hawkish. For some reason, the markets had been hoping for, if there was a rate hike here in December, which there obviously was going to be. I think even part of the market was thinking they wouldn't, but that was insane. They were hoping for the Fed to be super dovish about next year and maybe say no more rate hikes or they're going to take a pause. That did not happen. Now, they did walk back how many hikes next year to expect from 3 to 2. But again, for some reason, the market was just all about oh, let's do no more hikes, let's be done. I think that was a little bit naive. I think about it, right? Was the Fed really going to say, yeah, we said 3 last time, but now we're going to go to 0? I mean, come on. The Fed's not going to admit that they were that wrong. I think going to 2 is a step in the right direction, and the markets have to realize that the Fed again had no shot. I mean, if the Fed went to 0 hikes next year, I think that would have been horrendous. In fact, I think that would have been very, very bad because it would have said things are in a horrible place. By the Fed just saying 3 to 2, they're saying, listen, the economy is going to stay solid into next year. And I think that's actually a positive. Now, markets have just tested the double bottom, but I think if you think about it in the terms of I just expressed, I think that's actually decent. Now, it'd be interesting to see if the markets start to read it that way and start to bounce back up. So far, we just tested the lows from the last 2 days. This is an insanely important level here, folks. If this breaks this low pivot here from the last 2 days and we close below these low pivots, the market then breaks February lows. And the market has a lot more downside. I mean, just in the short term, probably into the 240s, but ultimately down into the 230 to 220 range. So, I mean, this is a really, really big level. And this markets are trying to fight back here. We'll see if they can go back to the green side. If you go back to the green side, you could go to the highs of the day. I mean, again, I think the market reacted because the market was in this kind of, oh my goodness, no hikes, that's what we want. But really what the Fed said is actually very positive. It speaks to the strength of the economy, which the market should actually like. Again, as I said earlier, if the Fed had said, hey, listen, we're not doing any more hikes. Well, what does that say about the economy? It means that we're crashing into a recession. What the Fed actually did was saying, yeah, we might be seeing a little bit of weakness, but the economy's doing okay. And I think that's the key. And the spiders are turning around here. Again, in this market environment, it's hard to know if the markets will read it that way, the way I just expressed. But I'm reading it that way, and I think the market should be reading it that way. But either way, as a technical trader, I'm watching this pivot low here, which is right around 253.5. We'll see again how that trades. On the upside, you have to look at the high of the day, which was just before the Fed statement. That's your bogey level. If you get through that, you actually should go all the way up in the next couple days to this 265 and change level up here. So again, really, really big price action here that we're going to be following, and we'll have to see again how it all trades out here in the coming minutes and hours. That's what we have on the spiders. A couple stocks I'm keeping an eye on. Apple was green earlier, now down 2.5 points. I think the market's now turning away from the Fed and saying, okay, now we're turning back. We know what the Fed did. Now we're turning back to the China tariffs. And again, notice how Apple went right down to this double bottom here as well. It is bouncing on the intraday chart, but again, this is another major level. If Apple breaks this level at 263 on a daily closing basis, you could be seeing a lot of downside here. I think I have this next level marked off on my chart. That's probably your next target if it does break that. Now, if it holds this level, it could bounce. But again, if it breaks the lows of today and closes below that 160, 163.50 or so, then I think you're going all the way down to this 155, 154 level. So that's quite a bit of a dip that could potentially happen. So we'll have to see again how that trades out. But really, pretty crazy here, folks. Pretty crazy. Again, on the spiders, I'm in the camp that I think, again, I think the Fed statement wasn't that bad. Russell is fighting all the way back. Let's go to the spiders again. And spiders are now up 60 cents, so look at that. And again, I would not be surprised if the markets are starting to view things as I did. I mean, again, we could go to the highs of the day here, folks. You heard it here first. You saw with the chart, live chart, when we were at the lows of the day, basically. And now we're up 70 cents, so starting to get a nice little bounce here. Let's go back to the intraday chart on the spiders here. I want to go back to that and just see what the chart is telling us. But that double bottom did get tagged. And now look at the nice bounce starting to form here. Now we got to get back. For this market to have any safety, it needs to fight off the negative and it needs to close positive. In my opinion, at least up $1. If it closed at the highs of the day, that would be insanely bullish going into year end. So again, we'll see here, folks. I'm watching closely. Again, we're trading it here at InTheMoneyStocks.com. I already put out a couple trade alerts today, an options trade as well. And this market is awesome at this staging point. I mean, this is good stuff here, folks, and great action. All right, bottom line is I'm going to get going back to trading, but have a great one. You heard it here on In the Money Stocks' video about this level in the short term. Again, if it holds it and we don't break this low, I think you can go long into year end. Have a great one, guys.